Hi trader, this is Elite Currency. My name is Chris. Today's focus is on the US dollar. You might be wondering what's going on with the USD. So let's take a look at the dollar index, the USD index, and you can see, of course, that price was in a big uptrend. This was a big correction back in 2016 where price still made one more push up that looked like a wave 5. And price has been in a downtrend ever since. It broke through a couple of these support trend lines indicated by the dotted green lines, and it has been accelerating even more so since about April this year. All right, we had lower highs already, lower lows as well, but the break of this zone right here, the long-term moving average, started an impulsive downtrend channel, as you can see, indicated by the red lines, and price has been in that downtrend channel ever since. So what's going on? Well, basically price is making a correction within this downtrend channel. Look at the blue lines at the bottom right here, and you can see two blue lines indicating a bear flag. This is a chart pattern. This is a continuation chart pattern. It's indicating a pause within this downtrend channel, and basically it's expected that price should continue with this downtrend momentum. We see bearish momentum. We see a good angle of this downtrend channel. There's no reason, no divergence present on the 4-hour chart nor the daily chart. For the moment, I don't see any reason why price should not continue. There is a bottom, a green line, but that's still, a while from here. It's still space till we reach that important support level. For the moment, though, moving averages are aligned, and everything shows that there is a bearish continuation to be expected. So, with this bear flag in play, the dollar will probably gain some good movements and momentum once the bear flag breaks. Once the bear flag breaks to the downside. Let's take a quick look at wave patterns as well. So the deep pullbacks at the beginning are considered to be wave 1s and 2s. Purple wave 1, 2, red wave 1, 2. And the channel itself is probably a wave 3, 4, 5 indicated by red. Within red wave 5 and purple wave 3, we're building an extra extension through orange wave 1, 2, 3, 4. You can see that the wave 3 orange, right, was very strong momentum. It took the price all the way to the bottom of the channel, and price has been making a classical bear flag, bear flag indicated by the blue lines. Sorry, and you can see that as soon as that bull flag breaks, there could be a wave 5, a 5, a 3, and this could change. Of course, these wave patterns, they could be extended, and price could go further. But for the moment, that seems the most likely. So, for me to be not bearish, price would basically have to break above the bull flag and above the red and dark red trend lines, resistance trend lines. Until that happens, I am bearish. Very simple. So what kind of setups am I seeing on the dollar index? I don't trade the dollar index. I just use it as a guidance to understand what could be happening with the dollar pairs, like the euro dollar, pound dollar, Aussie dollar, dollar yen. This is the 4-hour chart on the dollar index, and you can see that price is testing the support trend lines blue. There is a resistance trend line red, so a breakout seems to be around the corner. It could happen soon. So if it's a bullish breakout, that's against the trend, and I don't expect price to move too far before we hit the purple box. The purple box is important because that could be a head and shoulders pattern. So if it hits the purple box in the long-term moving average, I think that's a resistance zone, and that could be a bounce level. All right. If it breaks above that one more time, then I think the 50 fib could be a bounce spot, plus the resistance trend line. There's a confluence. So those could be interesting bearish bounces in those two zones, either the head and shoulders or the 50 fib. If it were to break above the 50 fib, then I think the bearish, basically market structure is temporarily put in the fridge, maybe even invalidated. In any case, have to reanalyze this chart. All right. If it breaks below the bear flag and it breaks below the support trend lines, then the breakout itself could be a setup, the pullback itself as well, and then expecting continuation down to the minus 272 target. So it's either the break, the pullback, bounce 1, or bounce 2. Those are kind of the formations I see, and that means that the euro dollar should continue higher to make one more higher high when this bear flag breaks, if it breaks on the dollar index. All right, well, let's see how it goes. That wraps it up. More information, free material at elitecurrency.com. Please share, like, subscribe if you enjoyed it, and wish you all great trading. Cheers.